Hi guys, it's Thomas here from COTBase.com. Welcome to this week's Commitment of Traders review. Today we're going to look at the 13th COT report of this year, and as usual we're going to start off with the changes in commercials positions. So here we go. You may see we've got a 31% change over here in commercials positions, pretty large, much larger than average change size, pushing commercials back into a short territory. They're net short right now. You can see a couple of weeks ago they were short for a short period of time. Large speculators are increasing their net long positions pretty dynamically, and of course this is a bearish COT change signal. Opening a 5-year chart, you can see that we are getting closer to a very significant bearish COT Extreme. The last bearish COT Extreme, well, the most bearish one actually on the chart over here, you can see back over here in mid-2015, and you can see it was a very good signal to go short. Here, of course, this is a little bit different because we have had prices going much deeper, and getting this bearish extreme here is a bit interesting, to say the least. You can see that we have to be cautious with these signals though, because if you look back over here in 2014, we had a significant bearish extreme in the market, but prices continued their rise. So caution is definitely advised over here. Let's move on and have a look at the S&P 500, where we have a 29% change in commercial positions. So this is a bearish change signal again. Opening a 5-year chart, you can see that we're getting closer and closer to bearish COT extreme levels. Of course, we're not surprised about that, seeing prices skyrocketing over here. Next market, soybean meal, with a 26% bullish COT change signal. You can see the change signal over here, larger than average. We have seen greater changes, but it's definitely one of the largest changes in the past 52 weeks. It is a bullish change signal coming at a point in time when prices are pretty low. You can see the whole last week prices have dropped, so maybe this signal could push prices a little bit back, at least in the next couple of days, upwards. And the wider term picture, here we go. You can see that the last extreme that we had to talk about was a bearish one, and you can see how well it signaled the further decline in soybean meal. And until we get to a let's say around zero level over here, I don't think it's too easy to talk about any extreme. Maybe small speculators, they're becoming very pessimistic, as you can see on the chart, and you can see how their pessimistic level coincides with bottoms in the market. So maybe that's a good warning for us that this decline could not continue for too long. Let's move on and have a look at large speculators COT Extreme. Well, we talked about feeder cattle, so let's jump over to the live cattle market, where we have 151 report extreme in large speculators. You can see it over here. So this is a bearish extreme. The only remark I could give you here is that there's plenty of space left to really reach those all-time extreme levels. So this trend that is happening in the report can continue for a couple more weeks or even month before we reach that top. So be careful with that signal. The euro market, and the next market, with 149 report extreme. Let's have a look at that. Basically, that means that commercials and large speculators have gone towards their neutral zone, the 0 point, neither net long or short really in the market. So that's interesting to see. But if you look at the wider term picture, they can easily change their positions, meaning that large speculators can go from net short territories back to net long territories, as you may see here where I'm just showing you right now. And that would be a good point where you can talk about a bearish extreme in the market. Now, prices declining for many months now. I think that we have to be cautious, of course, with any sudden judgments from the report over there. So maybe not the best market right now for acting on a COT report signal. Russell 2000, our last market for the review, 129 report extreme over there. Wow, you can see how dynamically traders are changing their positions over here in this market. So basically commercials have been from a very large bearish COT extreme level are jumping back towards a bullish extreme level. Total chaotics over there. I don't think that there's too much we could analyze from that. It's not the easiest picture. And of course, Russell 2000 maybe not the best or the strongest index among all indexes that we should take the COT analysis so seriously. So I'd suggest, if you want to trade this market, to really go into in-depth COT analysis in the S&P, the NASDAQ, and Dow markets. And then, of course, if there's a significant or strong bias over there, then you may act on that in the Russell market, of course. So that is all for this review. Don't forget that you can look at other COT charts for free on our COT charts page, and COT analysis page will give you the opportunity to go into a more in-depth and detailed COT analysis, where of course you can look at other COT report types, data types. You can do your historical analysis on other older reports, and of course you can look at all markets, and you can add other great functions to the table for more detailed COT analysis. I hope you enjoyed this review, and I hope to see you next week. Have a great week. Take care. Goodbye.